Yo, what's going on, everybody? Welcome to the sesh. We're going to start in about 3 minutes with Nick Chahine, lead trader at the Options Inner Circle chat room. Make sure that you don't miss this. We're going to start in like 2 minutes. We have a meme stock special today. We're going to be talking about meme stocks. All right. Most recently, we're going to be talking also about KPRX and a couple other things. Gus, what's going on, brother? I'll see you guys here in 2 minutes. We're going to get this thing rolling soon. Folks, welcome to the session here. We're about to get this started here. Sorry, I'm a little under the weather here, but we're gonna get this going. Let me just turn this down a bit. All right, folks, my name's Rodrigo. We're gonna be going over some of the meme stocks, right? The whole meme stock world, everything there. We're gonna talk about BBBY, GameStop, AMC, all that stuff, KPRX, and we're gonna pretty much go through this from the options perspective as well as if we can see anything there. And we're gonna do this with Nick Chahine, lead trader from the Benzinga Options Inner Circle chat room. He's been with Benzinga here for about 10 years. I learned I learned a lot from him, and I believe that we do have him in the back. So let me go ahead and see if we can squeeze Nick here. What's up, Nick?
What's going on?
I think you're muted.
No, I'm not. I don't think so.
One second.
You can't hear me, but I'm good.
Yep. Can you hear me?
I can hear you fine. How about you?
Yep, all good. I was just changing the settings here. So
yeah, no, I'm good.
So how was everything in the chat room today? Really quickly, right before we do get into a couple things here, but like everything, the chat room is all day. It's intense, brother, right? That's intense.
Today was very intense because I hope I got to people early enough to where they got out of bearish positions that were expiring today early. So today was proof that doing the right thing doesn't always pay, but it's definitely important to do almost every time. So long story short, we ranged the action by selling spreads, and bearish positions played out perfectly. But if somebody didn't close them and was trying to save 5 cents, they left the position open, they got blown out late in the day. So hopefully they listened, because I kept on them. It's 5 cents. What are you waiting? It's 15 cents. You see it climbing. It's 25 cents now. And then boom, it's $5. So you go from losing $25, wasting $25 to losing $450. So that was the lesson in the, but I didn't hear anybody complain. So I think everybody listened and everybody closed early. So the chat room is intense. It was very intense late in the day. Yesterday was intense, but in a fun way. I recorded it. One of these days, I'll release that recording. We won like at the last minute with a really low odds, low risk, high payout trade called Iron Butterfly. So it's very active and very educational. So 300 people, the conversation can get pretty intense, but definitely worth it. Definitely worth it.
Right. Do you mind sharing your screen and pretty much kind of explaining this, because I think it's,
Yep.
We got to kind of unpack all this stuff. It's pretty a big thing that you're doing there.
Yep. So I will go to this one. I think this one sharing. So you should be seeing my charts. So what happens throughout the day, and this, by the way, folks, is the tail end of what I do for and with Benzinga. So like you already heard, I've been working for Benzinga for more than a decade. And we've been working together. I don't work for them, but I do what I do, and they're happy to host me. And they back me up with a money back guarantee with anytime we do anything. So the offering transitioned from static, me writing something, to me writing something twice a day, to having a chat room supporting the me writing something. And now I have a live room and a Sunday webinar for 2 hours for whoever wants to attend. So the live room is where I'm starting, because it's exactly what we're doing here. Me sharing my screen and talking into this all day. So I'm in California, so I'm here talking, sharing screen somewhere around 5:45 my time. So about 45 minutes before the market opens. I try not to start talking until the market opens because it gets exhausting. So, and I don't get off until they report. Like this afternoon, there were a few companies reporting, and I provided some guidance. And I think I guessed right on which way they're going to go. I'll check in a second. So the live room is where, if you're lucky enough to join us, you're going to learn a lot. You're going to have a lot of opportunity to trade the range. So today was very fruitful, because even though the price action was bizarre, we played the levels perfectly, so we had the opportunity to profit. If you see all these little lines, this one made us an immediate, this one played out perfectly. And this one depends on what time somebody joined. And then the rest of the day, we played every level that's tradable. And today they had a lot of swing opportunities. So if you were good buying something and letting it run, you had an opportunity like right here. Towards the end of the day, not much time left. It looks like the bulls are out of bullets. I said, if we get to 417, which was this one, we can add another dollar easy. And I said, if we do that, that might take out the high of the day, and that's just a complete beast all by itself. And look what happened. So if somebody chased with calls, or at least they heard me, they got out of their bears. So if they were owning puts or shorting calls, then they know to get out. And sure enough, they broke out, they came, tested it for footing, and they take off. And if you're a meme stock person, if you don't know this stuff, that's how it all happens. So we'll pull up a couple meme charts in a little bit, and we'll, today we did discuss them. Somebody asked me specifically, so I had to answer is like, are you investing or are you trading? So I always have to make sure that the person asking the question, that I know what their intention is, because it's different. The answer is different. It depends on what they're trying to do. So anyway, today was a lot of fun. This happens all day, every day. The discussion, there's a chat room going, just like what we have here, but I can't see the chat room here. So Hot Rod, you're going to have to tell me if somebody's asking a question. So it is questions to me all day, question to other people. I have 2 or 3 people that are super strong technicians. Today, Katya was the star, and then Cypher came in and validated her. Somebody said, I'm buying puts. She jumps in, no, don't buy puts. She knows she has a technical advantage by using something called pitchforks. And she forecasted 4,200 and change. And so did somebody that uses Fibonacci's and harmonics. They said the same thing. When 2 people that know what they're doing say the same thing, you tend to listen. So I was going to short, and that was around here. And then I heard them say that, and I stopped. And then I ended up shorting here, very gently shorting. My position doesn't take heat unless we get to 42.65 in the SPX. So this is the this is the SPY. The SPX is the index. The SPY is the ETF that tracks it. So tomorrow, if we're below 42, Where are we? 42.65. Here, I'm good. So the discussion is lively, the education is tremendous, and after the market closed, I had to come here, right? So I had to go get a bite to eat. Somebody said I can share my screen, and they jumped on and they started talking charts from their own perspective for about 40 minutes. So I just came in and I said, I need my screen back. I need to close out the session. And he said, yeah, I need to as well. So there was 45 minutes of content that didn't come from me. So the camaraderie is cool. If you're trading meme stocks, I think you need to trade in a group. If you trading a meme stock or a fast moving stock, a momentum stock, doesn't have to be a meme stock. You need to know charts, and we know charts, bulletproof level charts. So my level of knowledge is not from Wall Street. I learned this stuff on my own, and it's pretty darn good. And it's in plain, simple English. The other people that are in there, they learn their craft forever, and everybody provides a little piece of information. So then the complete look is stronger than as if you were trading on your own, or I was trading on my own, or they were trading on their own. So find a group of people that can help you trade. So where do you want to get started first? Do you want to do a mini lesson? Actually, I want to get started here. This is a presentation that I did once, and I love it because it's very simple. I'm not going to do it presentation style. I'll just go through the bullets and what it says. Whatever you're trading, however you're trading, there's no shortcut around this. Anytime you take a position, you're opening risk. You need rules. Those rules are universal. You cannot break these rules. If I asked you to teach a class about what is risk, I bet you'll mess it up. Not because you don't know what is risk, because you don't know how to verbalize it. And maybe you're missing out on the nuance of what is actually managing risk. So when I say, tell me about risk, when I say manage risk, what do you mean? What do I mean? Everybody gets it right from the standpoint of how much can I afford to lose? What am I willing to lose? Everybody gets that part right, but that's not the part I manage. That's the part I make a decision on and I move on. Okay. Sometimes you manage it by taking a part position and then another part. But once you decide on the size of the risk, how much, what's the consequence, what happens if I lose, how much, what's the penalty, that you make the decision. You say, okay, I'm going to risk $1,000 or 500 or 10,000 or whatever it is. And you move on. That is not the part you manage. The part you manage is, what are my odds? So one thing to know is how much you're going to lose. The other thing to know is what are your odds? So if somebody asks me to jump a gap, hey, jump between these two buildings, the first thing I'm going to ask, how deep is it? That's the first thing I'm going to ask. Then I would contemplate whether I would even consider jumping or not. If the depth is lethal, I don't care what my odds are, I'm not jumping. What does that mean? With meme stocks, that is so important. What do I mean? Shorting stocks outright is financial suicide these days, because when you short a stock in the traditional sense, or when you sell a naked call option, you are opening yourself to unlimited potential loss. That's the definition of selling a stock. You're saying you can cover. Maybe you can, sometimes you can't. When a stock is oversold, there aren't any stock to buy. That's why you get a short squeeze, because everybody is rushing to buy it to stop the bleeding, because they're getting called away, they're getting liquidated, and you go to buy it and it costs $10 and you find it for 10. You go to try to bid for 10, somebody bids 11. You go, holy crap, let me cancel my 10. I'll bid 12. Somebody will cancel their 11, bid 13. You go to 400 and suddenly you're bankrupt. And we're not talking like they will liquidate your account and you will walk away from it. It doesn't happen often, but it happens a lot more often in meme stocks than in others. So for meme stocks, this is super important to take risk you can survive if the you-know-what hits the fan. And you always have to assume that it can happen. If you assume, oh, it's not going to happen, I'm just going to short it for 10 minutes. That's all it takes. I know people that got ruined from the first GME spike They didn't expect it. They forgot about the one that happened, what is it, 2018, I think, 2017, Tilray. It spiked to $300. It was also hard to borrow. I couldn't even close a winning trade with Tilray. I sold the naked put at 40. It rallied. The stock was at 120. It went to 300. I couldn't close the sold put at 40, which won me money. I couldn't close it. I had to give up half my profits. So that's how violent that was. So you can imagine trying to cover a loss. Yeah, it was impossible. So if the gap is too big, I'm not going to even consider jumping. So I don't care what my odds are. I'm not playing. Now, let's assume it's like, okay, it's about 3 feet. I know I can fall 3 feet and not kill myself. Then I start considering, okay, so I have an 80% chance of jumping the gap. So now I will play. So that's the concept of taking risk. What is the maximum penalty? Am I okay taking it? If I cannot compute it, naked shorts, you cannot compute it. It's by definition infinity. Then you shouldn't take it. That's my opinion. And if you do take a position, open risk, then you start talking, okay, I'm taking this position because of this reason, and you need a reason, and my odds are X. I have to write down the odds. And the odds is subjective when you're using traditional investing. You do your homework. Theoretically, mathematically, it's 50-50. If I buy shares, maybe I'm right, maybe I'm wrong. It can go up and can go down. So mathematically, it's 50-50. I can do homework to give myself in my head an advantage of sorts. So I keep that advantage in my head noted somewhere, because 2 weeks later, I reassess if I still am convinced of this advantage being there and I still have 60 or 70 or 80% chance, meaning I'm beating my opposition. Who's my opposition? The person that sold me that thing. Then I may stay in it. Otherwise, if my chances drop, then I decide to exit. So you see how important it is, one, to know what's the maximum consequence, and two, know what am I managing? My odds. That's what I'm managing, my odds. Not, this is fancy. If I run it, you'll see. Anyway, so that's the point. And before we go further, I also want to ask you to do this. Whether you're trading meme stocks or not, this is super important in meme stocks. Somebody said today, would you buy a call in AMC late in the day? Somebody that doesn't speak much in my chat room, out of the blue, they come in and say, would you buy a call in AMC? So my immediate question is like, are you investing or are you trading? Because if you're investing, my answer is flat out no. I have no faith in the management. If I'm trading, yes, absolutely. It's falling into support at the time. I'll have to look at the chart in a second. From a trader's perspective, if it's falling into support, I can assume that the support will hold and put a stop. If it doesn't, I'm out. So from a trader's perspective, yes, I would. From an investment perspective, no, I wouldn't. It's not for me. It's for somebody else that likes it. They may disagree with me. That's what makes a market. But this is where it starts. This stands for no trigger, no trade. So if I don't have a reason to take a position of any sorts, I shouldn't do it. And I thought it was going to go up as not a reason. I thought it was going to go up because it's falling into support. Now I have a reason. Why is that important? 1 second. This is my son trying to reach me twice, so I got to make sure it's not an emergency. On a call. So because I said to myself, okay, AMC is falling into support, now I have a way of me saying I'm out when my support fails. Then I have an indicator that tells me you were wrong. Let's get out, salvage the trade, reassess, and trade later. So if I didn't have a reason, then how would I know to get out? There are ways, but the reason is very important. You should be able to explain yourself. If somebody says, for example, I get a lot of questions every day, and a lot of them are, hey, I'm in this call. What should I do? My first question is always, why did you take it? It sounds like I'm picking a fight or nitpicking their, they get defensive. It's like, no, I'm really asking, why did you take it? To see if you had a reason and if that reason is still there. If you didn't have a reason, maybe you should get out, that right there. Or if you had a reason and now it's gone, then you should get out. That happened yesterday. I can't remember the ticker. somebody bought a call, the stock has fallen, the call is still statistically viable. So the other part of evaluating is what is, what are the odds of it succeeding? If it's still statistically viable, but they were red, so clearly they mistimed their entry. And I can't remember the ticker. Anyway, so I had this whole same conversation I'm having with you right now. They didn't have a reason to get in. They didn't have a stop. So because they didn't have a reason, they didn't have a reason to get out. So then the stops become very important. The stops can be good and bad. So if I take a position and I tell myself, you know what, I'll take it from here. And if it hits my target this here, I get out regardless of where else it can go from there. I should be okay to see it run without me. That's one. The other one is if something goes bad. So if I risk $1,000 to open the position, I should immediately tell myself before anything happens, if I lose 200, I'm out, or 300, or 400, or $20, depends on you. Every person is different. Risk appetite is different. So you can say, if I lose 20% as opposed to a hard dollar amount. Now, there's another way. Like I said, if a meme stock is falling into support, or a stock is falling into support, and the reason I took it is to bounce off of the support, and then support fails, I should stop out regardless of how much money I made or lost, because the reason is gone. So if I stay in it now, what do I got? Nothing. I'm just hoping for the best. So having a reason, super important. Having exit strategies, booking profits and stopping out for good and bad, is super important. It's a skill to be able to leave money on the table and survive. If you're here to be in this game for a long time, if you can't see a stock run without you, you're not going to last. You're going to get frustrated, you're going to get aggressive, and you're going to make the wrong decision the next time, and you're going to lose, and you're just going to leave out of frustration. So that's an important skill. Booking losses are also important. They become easier if you're managing a portfolio. Like if you consider your account on a day, like today, I had a good day overall. If I had one trade that was losing, I have no issues closing it, because if the goal was to make money today, I made money today. So what if I lost on this little trade, right? So that's kind of the attitude that professionals have, and you should mature enough to have that. Those things are super important when you're trading stocks that are fast, meme stocks or momentum stocks. That would include Tesla and Amazon, stuff like Roku, all these leveraged tickers like Labu and stuff. They run fast. So if you don't have these skills, they will run you over quickly and out of town. All right. So these are important things to know. This is kind of like a regurgitation. So this averaging in, I'll mention it. Right here, I said, this is a decision you make once and you move on. I said, sometimes you manage it by saying, okay, I think this is an entry point. I'm not going to go all in. I'll take half a position and I'll reserve half. But you made the decision to risk the lot, only half now. And now you have something left in the tank to deploy lower if you need to. So I use that more often now. Why? Because the VIX is over 22, I think it was. So that tells me the market makers, the VIX high value is a direct reflection of expensive options, where the prices are set by the people who set the casino. And if they're nervous, I should be nervous. What does that mean? If my conviction is 100%, I should knock it down to 60%, just from that fact that the people that make the game are nervous, you know? So if I'm in a race car driver, if I'm in a car with a race car driver and he or she have their seatbelt on and they put the 5-point harness and I take off my seatbelt, that would be irresponsible of me, right? If they're worried about their safety, I should be worried about my safety. High VIX is the market makers worried about their pocketbook. I should respect that opinion and be a little bit less convicted. So don't take full size position. That's the bottom line. Today, I caught the falling knife of CRM. I left room for error. So that's just an example. All right, so enough with the talking head thing. This is my static chat room where you can chat with me 24/7. I post opening remarks and closing remarks and trade setups in here. And there's a way for us to discuss. This is somebody else's charts, not mine. I forgot his first name. Last name is Patel. Had a couple of questions today, very specific, and I answered them. I haven't read this comment yet. Oh, NVIDIA trade. Looks like they put a credit put spread there. Whoa, that's a wide one. Anyway, so fun time there. And we can jump into tickers. Where do you want to start, Rod?
Right. So really quick, just getting a couple of questions here from the chat members, a couple of emails as well. Rajesh has a good question there. I think we can go over some of these, Nick, really quick before we get back here on the session. All right, man?
I'm all yours. You're the conductor.
All right, man. So
I'm the monkey with the symbols.
And so we have some good questions here. Again, thanks a lot, folks. These are questions from the, from all you guys here. Rajesh has a good question there. What kind of options, trade services? All right. So yeah, we're definitely gonna get to that here. Let me just pull up here because I jotted down the main questions that I saw. All right. So is the from Phil here, are the sessions on Sundays recorded? So yes, they are recorded. The sessions are from, I believe, 10 a.m. Eastern till about noon or a little bit later. And that's pretty much, all you chat members with Nick, and you submit a form with a ticker, as many tickers as you want, and Nick will review it and we'll post the recording in the chat room. Good question there. Next, does everybody that joined gets a free laptop? Yes, everybody that joins will get the free laptop. The schedule for the chat room is Monday to Friday, 9 to 5, and then Sundays from 10 to 12:30 around there. And
the schedule for the live room, the chat room is open 24/7.
The blue chat room, right? The blue chat room is open 24/7. The live room where Nick is showing his screen and talking with traders like that, chatting, private messaging, that is 9 to 5, Monday to Friday, right? A money back guarantee question. We do have a 30-day money back guarantee. So there's really no excuse at this point. And the price at renewal is going to be the same as today, 70%. So I think that covers everything, unless you've added anything new there, Nick, to the chat room.
No, well, I have a little different format. I changed format, so it's going to look a little different to you. These are 3 from the last couple of days, 3 comments that I took snapshots that were worthy of noting. The old chat room looks different. So anyway, these are comments. Yesterday, we nailed an iron butterfly. So I'm trying to see risk management. I took this note because, so this is Vic. By the way, I would like to thank you, Nick. Earlier today, I closed my credit put spread from yesterday. So the day before, he had a trade that was in trouble. So he said, what do I do? I said, it's early enough. You're worried about it. Punt it. Move it to the next day. Live to fight another day. And he did. And he paid a little bit to move it. And he was telling me that he closed it for a profit. So he bought himself some time to be correct. His trade came under fire. He came in here and he said, whoa, what do I do? And I told him what to do. And then he was coming back to thank me for that. So when I said risk management, we looked at the odds of success. Was running out of time the day before that. It becomes impossible to save the trade. But if you act early enough, then you give yourself, you delay the odds of failure one more day. And then he succeeded the next day. So here's another one. There's Katya. She is the one that was a hero today because she saved a few people from shorting late in the day at the last burst. It looked like, okay, that's it. Nope, they doubled up on it. So she went away for a few weeks, life, and then came back. And she said, I love this room. And she is fully accomplished to have her own room, by the way. Best there is out there, hands down.
Hey,
that's
Nick,
somebody that knows what they're doing.
Really quick here. Victoria here has a great question here from the chat. By the way, great questions. Keep them coming, guys. Is the inner circle just for options trading? How about course for beginners?
It's not just for options trading. In fact, I have people in there that cannot trade options from overseas, and some of them trade futures. Some of them trade straight up stocks. I've recently bought more stocks than I have in a long time. Here's what you will learn in being in our group. You will learn discipline. You will learn how to read charts and apply it to however you trade. So for example, if you would loved it that before you set any trade on, to run it by somebody that knows, or at least one person that knows what they're doing with charts. For example, You can do your homework on a particular company. If you don't time it right, you may start out on the wrong foot, in the hole. Most of you, I can guarantee it, you hardly ever pick bad companies. Most of the losses come from bad timing. And timing is so important. The old adage of over the long term, it doesn't matter is ridiculous. I cannot believe smart people say such garbage. So if it doesn't matter, why get in if it doesn't matter? If you think over the long term it's going to wash out, what's wrong with waiting one more second to ask somebody that could maybe save you 20%? So if you don't get here now, maybe I can tell you, you can buy twice as many shares in about a week for the same price. Wouldn't you take it? You would. So if you join the group, we look at fundamentals, we look at technicals. I shared the way I would trade it, but if you tell me I can't do this, what can I do? Like today, somebody wanted to short using options tomorrow's action in the SPX. I said I would do a credit call spread or a bear call spread. They said I cannot sell options. I can buy spreads. I said, okay, well, you can mimic a credit call spread by buying a debit put spread in the money on the SPX because it's a cash settled index. And I went through a whole 20 minutes explaining what that is, with pictures and everything. So whoever was there picked up a new skill by I can fake it into thinking I have a credit spread when I don't need credit spread permissions in my options data. So however you're trading, I think you will benefit because of the way we approach things. Timing is super important, whether you're trading faster or not. It's very important. Plus, understanding charts is a skill that I acquired on my own, and it's not as complicated as they make it out to be. Trust me, if you simplify in fact, I'm issuing you a challenge. If you have indicators on your charts that you did not use to take trades in about a year, you're not using them, take them off your chart. They're not useful. You should only have maybe 3 studies maximum on a chart, maybe. I don't need anything. I have a couple, but I don't need them. So do we teach? Yes, we teach. We have standalone videos, which I can't find anymore, Hot Rod. The new dashboard, look, I couldn't find them. Anyway, I have a page of videos that explain basic things for somebody that doesn't know options. They go in, what's a call option? A whole video on that. What's a put option? A whole video on that. What's a spread? A whole video on that. What's a credit spread? A whole video on that. There they are. So also, what's a cash settled? I just said those words earlier. I have a whole video explaining what is a cash settled and how is it different than a regular ticker. So it's super important, especially now with the SPX. The SPX expires every day now. So now you can put a bet and you walk away home. You don't have anything on. You wake up the next morning, you make a bet, you walk away. So every day we make a trade that could deliver 25% every day. So today it delivered, but if somebody didn't close it in the last minute, they got blown out. They suffered a loss if they didn't do anything. Like if they left the movie when the credits are starting to roll and they didn't close their risk, if the risk is open, you got to stay there watching it. So if they didn't pay attention, they had the opportunity to get out. And I would be shocked if anybody in my room got blown out today because it happened in slow motion. But if they left, they didn't see it. They got blown out. But I don't think they left from my room. Well, I'll find out tomorrow. So this is what, okay, can I have the screen back? Hot Rod.
Yeah, I was muted there first. What's going on?
Oh, no problem. Can I have the screen back? Do I have to take it back or can you
Yeah.
give it back?
No, you have to just share the screen bit
Okay.
normally.
Okay.
Yeah. All right. We have some questions, good questions here. Rajesh has a question. Let's see. Let's open the chat here. Victoria says, thank you very much. See you in the inner circle soon. We will see you there. Rajesh, what about so Rajesh is asking how many trades in the chat room, that sort of stuff. How many trades are
I don't know, 20 during the day. Those are in the live room. I post about 1 a day. Maybe I skip a day. do for the slow, not live. So I have the live room where I'm in there with 300 people trading live. I'm sharing, I'm talking. And the chat room, the write-ups, the members, I usually share one write-up that has one trade idea. And for example, today's was, okay, CRM was falling out of bed. So I went and looked at that was reaction to the earnings. I read the earnings. I explained to them what I see, what the headline said. And I said, I'm willing to take a risk on that. It's a slow risk that leaves room for error. It could deliver me 14% on my risk, 14-ish from memory. And I don't need a rally. So I just need it not to collapse. So we set that up. So this is another comment from the live room. This guy, EC Car Deal, been with me for a while. So other than this, today he jumps in and he said, here's my trade. And he shared, he has a butterfly trade that was not mine, that was his. And he said, it's a broken wing butterfly. And he gave the parameters and he said, if by tomorrow price closes between here and here, I make maximum gains. And he laid it out. And he said, otherwise I risked, and he laid it out. So if somebody else liked those odds, they would have taken the trade and it's not mine. But this was his comment. I think that was yesterday. August 24th, credit put spread made 36%. This is the iron butterfly. It was hilarious. We were screaming. It was hilarious. I forecasted the close wherever we closed, 43.40. We closed 43.40.77. So it was almost maximum gains. You couldn't have nailed it any more perfectly. So everybody was hooting and hollering that took that trade. It only cost 80 cents per contract, or 85 cents, and it delivered up to $4. So it was a good trade.
Nick,
so
really
the
quick
camaraderie
here,
is good.
we have a question here. A trader, because I know that you have number one, the chat room is international, right? There's people from Japan, Korea. I talked to somebody from South Korea.
We have Dubai,
yesterday.
we have everywhere. We have France, we have Germany, we have Australia, we have Australians in Germany, Germans in Australia.
It's pretty diverse. So Rajesh has a question. Is this annual? Yeah, 1782 annual. Lifetime is separate. You'd have to send an email. I'll put the contact there in a bit.
So let me put some context on the cost. Consider this a classroom with recess at the same time, because it's fun, and it happens whenever you want it to happen, and it's open all year. What's the price of that? For you to learn a craft that can make you money for the rest of your life. To me, the amount they're charging you, I would charge that a month if it was my own deal. But this is the platform is Benzinga's, and I'm providing the content, so they control that. And because they're so big and good at what they do, they can offer it at a pretty low price. If you're serious about trading and you you need help, that's why you're here, and you think that this is a big cost when they can give you your money back if you don't like it, I don't think you're really serious about improving the trade setup. I can guarantee you that you will be better at trading in my group. I can guarantee it. And if you don't like it, they give you a crap ton of time for you to change your mind and get your money back. So you're really, you're not risking anything. You're taking the expense. But if you're whipping out your credit card and spending money, then you're mentally engaged and you will give it the real shot. I've taken free trials before. Maybe I apply myself, maybe I don't. But if I spent some money for a free trial that I get my money back, I would work it to death before I decide if it's good or bad. That's the good thing about paying up front and getting the money back.
Right. And we have okay, so that was a good question there. All right. Let's see the next one we have here. All right, so Evelyn says, hello, I'm a beginner. I've never made a trade in my life. Do you teach me from A to Z, or is this only for people with some knowledge in trading? Thank you in advance. From Evelyn.
So Evelyn, if you are patient, I'm willing to spend all the time you need to get you to base one. So what I can share is all the knowledge I know, and I will be patient, I promise. I have hundreds of people in the room and thousands of questions a week. I never ignore one unless I didn't see it. So if you come in and say, I want to start investing, what's a good stock to buy now? then I'll immediately know that it's Evelyn. And I'll say, and then I'll say, before you use real money, how about we put a scenario and you make pretend and practice a few and see how well you do with the risk. And then we'll jump in with real money, small, small, small. And I can help you say, okay, let's say you come to me and say, I'm interested in Tesla. Everybody's talking about Tesla. Now that it's split, maybe it's cheap enough for me to buy it. Well, my answer would be, splitting doesn't make it cheap from a company perspective. It makes the stock more attainable for smaller accounts. The value of the company does not change. So we will address that part. And then I'll lay out the pros and cons and how good financially it is, and what are the challenges, what happens if Elon leaves. So what kind of time horizon?
So there's a ton of education basically that will help somebody if they're new. So that's for everybody out there.
Yes.
Fernando there, interesting comment there from Fernando. It says, I signed up there on the Zoom chat. I signed up about 3 weeks ago. I'm making $300 to $500 daily on SPX trades.
I know who he is.
Is that the Fernando I think it is from the chat room?
He's from the chat room, live room. So yes, it's a lot of fun. I had a couple of comments like where somebody said this was a free trial and it's definitely a keeper. I think that was Gene from about maybe 3 or 4 weeks ago. I have a snapshot of it somewhere. So we're not perfect in the live room with our calls. Like today, I expected it to slip a little bit into the close. Instead, it exploded. I expected a down day on Thursday in caution into a Fed event tomorrow. And I thought that we would rally like this tomorrow after 10 o'clock in the morning, after he speaks, Powell. But apparently they did it today. It'll be interesting if I was a day off, like maybe tomorrow they'll have a letdown. Maybe they're expecting him to say, it didn't dawn on me. Maybe they're expecting him to say, oh, okay, we've raised enough. Well, to me, this is not a policy meeting, so he shouldn't say anything new. He should just blab about whatever the hell he wants to blab and not change Federal Reserve policy in a non-Federal Reserve event. This is just a speech. It's not a meeting of the Federal Reserve in order to do policy changes. Anyway, so we are not perfect, but we do manage our risk very, very well. So we take the risk in the morning. We assess the risk in the middle of the day. We assess the risk in the evening. We try to take a fast trade in the evening for fun. And throughout the day, I entertain a whole bunch of fast trades for people. Say, can you cover Tesla? I'm in it. I'm looking to buy a call. So we lay out the Tesla outcome, for example. Today I had demands for coin intraday, which I rarely do. And one person that wanted to own coin for the long term by committing and selling puts, I said that wouldn't be a stock I would do it with. So the debate is broad. The conversation is very fruitful. There's fun, but there's no noise. It's not a typical Discord where 6 million people are talking. I'm the only one talking.
Yeah, that's the thing. I've never seen a place that has that somebody's out there 9 to 5 the whole day, every day.
It's exhausting. My voice has changed. No joke. It has changed because I'm doing this all day, every day, and often enough sessions with you. You're so kind enough to give me your time. And twice on Sunday. On Sunday, I have a 2.5 hour webinar, also live, that I record. And then in the evening, I record another video that's about 10 to 15 minutes, which is a strategy video before the week starts to tell my members and readers, here's what I think is going to happen. Let's get ready. And it's usually spot on. The strategy these days, I don't add to current position. And if you didn't pay attention, I shorted Apple right before the day it dropped. Shorted it by selling a call spread, meaning a limited exposure. So I have nothing against Apple. Clearly the best company on the planet, arguably by metrics. When it got to here, I sent out a note. I said, I want to pick a fight with these and I would like to fade Apple. And I shorted it at 185, I think 185, 190. So I gave it room. I said, hey, you can rally a little bit more and I will close my short if I'm wrong. But my logic was, this was it was like 4.5% from a closing high. all-time high. What? So I picked a fight with it. And then when it fell, I said, I don't hate it. And to prove it that I don't hate it, I took a long position. So now I'm inside of an iron condor where I would win if Apple stays, there we go. Apple stays above 148 and below 185 or whatever. So if Apple stays in this box, I win. That's all I needed. Anyway.
Right, Nick. So you basically do because we have a whole, mix of people here. We have people that maybe are just like that person that, is just starting to trade. And there are very advanced traders as well, right? So for those that are more advanced, you can entertain them with condor spreads, butterflies, all
so
that stuff, right?
let me address Evelyn, who is the never traded before, never invested before. So if Evelyn comes to me and says, "Ooh, I read on the news, I saw on the news, BBBY, blah blah, a few days ago, I want to get long," I'll say, Evelyn, well, let's look at the chart. First of all, let's look at the business. Crap, right? Lower highs, expanding losses. That's the opposite of good. If you look at a good company, it should be higher from the left on up to the right. This one is going the wrong way. That's first. So investing, it's not attractive. Not for me. I'll pass. Trading, if you're up here and you bought it, all you had to do is just look left. Just look left. Last time it was here, catastrophe after another. Why is this time going to be different? Let them go above it and prove to you that this time is different before you chase it. So if you're ever considering a situation where a stock is coming into a place where they failed before, consider not opening it. I'll give you a real life example. If you're looking to open a restaurant, this is real advice, by the way. I used to do analysis for 400 restaurants. And you consider buying a location of a failed restaurant. Nope, because there is a reason there's a restaurant that's failing, and it could be actual location, right? So timing, there could be a reason why this keep failing right here. Don't take on that reason without knowing what it is. So the least you can do is just wait out a couple of candles. Let them take it out with force, and then you can chase it. Until then, when you go to buy a stock, when you go to short a stock, when you go to buy calls, consider a position in a stock. Do me this favor. You don't need to be a chartist. Just look left on the chart. And by the way, if your chart looked like this and you didn't see anything left, zoom out. There's probably something there. I wish I could remember the stock today. Somebody asked me.
Hey, Nick, really quick here. Sharon asking, where is the link to sign up? The link is posted in the chat, everybody, so you can see it there. And next question here, Rajesh. Rajesh seems like he would be a great fit for the chat room, saying, I'm an experienced trader. I love calendars. What's your take on them?
Calendars, I like them a lot. I'll explain in a quick jiffy. So today that conversation came up. So there's a person who is pretty good at trading. I'm trying to find that ticker that was perfect example for what I'm trying to say. Pretty good at trading, but their account is restricted where they cannot sell spreads. So they cannot do the calendar. So they have good timing. Like if you know where a stock is going to go in a certain period of time and you're trying to swing it, say, okay, it's going to go from here to there, but it's probably going to take 3 weeks. And you buy a position into that, like you buy a call option, which allows you, I might have something open. Okay, so you can't do it with the SPX. So let's go with Tesla maybe. So let's say you like Tesla and you think it's going to rally in the next 2 weeks or 3. Meta may be better because Tesla just split. They have those weird numbers. Okay, so you buy a call. You say, okay, in the next couple weeks, I think Meta is going to rally. So I'll buy a call. Now you're long Meta. You paid $500. So how do you profit from this? If you don't know options, it doesn't matter. You bought something that would go up in price if the stock price goes up in price. So if you pay 500 and you're right that Meta is going to rally in the next 2-3 weeks, then that 500 can turn into 1,000. It will grow in value if price moves towards it. And this is up. Look, see, price up. So if price goes to 180, so this means has been price passed through it. So this will turn into $1,000 and you only paid 500. So you doubled your money. You make more money than what you make just being long the stock. For example, the stock was up 3% today. The options were up 50%. So if you nailed it, but look, the people that got it wrong lost 40%. So you win fast, but you lose fast. That's why the calendar that they mentioned helps you mitigate that. How? So now you own an asset. The idea is, let me put it to work. Can I sell something against it? Yes. So you go to a shorter term time frame and you sell something and you collect. What was the risk I chose? 172.5. Perfect. 172.5. So I can go to tomorrow. This expires tomorrow, and I can sell this one, and that will be a calendar. So if I sell it, I'll add it here. So now, whoops. There. So now I own this and I'm short this. So all in all, I want Meta to move, but not too fast. Like tomorrow, I don't want it to go much past 172.5. Why? Then this one dies. I sold it, so it dies in my favor. It goes to 0 or 10 cents and I buy it back. So then I'm staying long this one for 50 cents cheaper. So I could have chosen the one for next week. So you'll see it here. And in this case, I would not sell the 72.5. I would sell like the 182. Why? Because I pay 500 and I sell the 182.5 for 50 cents, or the 180 for 80 cents. So 500 minus $80. So now I dropped my price. I'm going to round to $400. Okay, I'm rounding, and I'm long. But again, I don't want it to rise too fast, because if price rises past 180, I'm long at 172.5, but I stop being long at 180. So I kind of limit my profits. That's not a problem that's a problem I don't mind. Okay. But that's not called a calendar anymore, because this would be a calendar, same level, 172.5, 172.5. This right here is a diagonal. I bought the call out in time, 22 days at 172.5. I sold the call shorter term, 8 days, 180. So I'm long here, I'm short here. That's okay. The platform knows I'm not short. I don't have any exposure from, like, if it goes to $1 million, I don't lose money. I make a little bit of money. I cap my profits. If I time it right, perfect. What do I need? I need Meta to rise, not too fast. I want it to stay under 180 in 8 days. I have an 85% chance of that happening, statistically speaking, by looking at the delta. That is a mathematical fact. It's a theoretical mathematical fact, but at least it gives me something to, like, it gives me a ruler. If a ruler is bent a little bit, that's okay. It's better than not having a ruler. So that is a diagonal. What the question was, calendar. Diagonal. I prefer diagonals in this case. The calendar, I would do it for this week. I wouldn't sell 2 weeks out. This way, I want them only to have 1 day against me on this one. That's a calendar, same, 72.5, 172.5. This would be a diagonal. But in this case, I would not sell it for 6 cents. That's too little. All right, next question.
Right, Garrett, very interesting there. And basically, that's pretty much what you're going to get, folks, in the chat room with Nick. This is the same. It's the same format. You know, you're there with
all day, every day. If you ask me, I will answer it in this chat room.
Interesting question here from Cade. What's your favorite Greek?
My favorite what?
Greek.
Oh, Greek. Okay. I don't speak Greek. I can teach an options class without speaking Greek. The only Greek I care about is the one I just mentioned, Delta. Okay. So if you want, we can go down the Delta aisle. How can I explain that for you? So we'll go to Apple, October. Okay, quick lesson on options. They're scary because of a lot of myths out there. People say they're dangerous. They're more dangerous than stocks. They are not. They can be, but they are not. They are. They can be more dangerous because they move fast, and if you don't use proper diligence, you're going to get a bit. So they say when you take an options class, one of the first things they tell you, most options expire worthless. This is where you turn off the TV and you leave, or the monitor and you leave, because if they expire worthless, you should be attending a class that sells them, and that's what I do. If most options expire worthless, you don't want to be a buyer of options. You want to be a net seller of options. So basically, you become a micro market maker. And that's what I try to teach everybody. I don't want everybody to start selling risk left and right, but I want everybody to start selling something to make their situation better. In this example of a calendar, most people like to buy a call. I say, okay, buy a call, but let's sell something against it to take the edge off and help your case a little bit. So Greeks, if you take options classes also, you will be flooded with definitions of delta, gamma, theta. What the, what? Why? Why can't you just say it in plain simple English? Theta, it's time. Okay. So instead of saying time, they feel the need to use a fancy word like theta, vega, gamma. You can spend time learning all of the definitions, or you can just learn what you need. So what was the definition of risk? What part do you manage in risk? This part. That's the part that tells you how you can succeed, right? And if you're winning, what are the chances of winning? Wouldn't that be the only thing you need? Okay, tell you where that lives. That lives right here in delta. So the definition of delta is also fancy. I invite you to go read the definition and tell me if it tells you how to use it. It says something along the lines, it's the change in the pricing of the option based on a $1 change in the underlying. Go put that to use. It's absolutely useless. So what if I tell you the definition of delta? It's your odds of success and failure. That's all there is to it. Let me explain. So this is Apple. Current price is $170. Current price is right there. I will use markings, annotate. I forget we have that stuff here. Draw this. Okay, so this is current price. You can see how the color changes. Okay, on this side, I have calls. So options come in two flavors, regardless of what they do. They come in two flavors. All these are calls. All these are puts. Ignore what they do. Just follow the logic. So options are contracts. They have a buyer and they have a seller. And when you enter into a contract, I just did one today, you have stipulations, you have terms. First term on this page, time. These contracts are for the middle of August 24th, 57 days on this contract. Everything here we do has 57 days and then it dies. Everything here is for Apple. Everything here is quantity for 100 shares. Every contract on this page, regardless, calls or puts, is 100 shares. I just said 3 stipulations. One, time, 57 days. Who? Apple. How many? 100. Everything here. And then price. How much? This is it. Price. Apple 170, 175, 180. So now we have a whole bunch of stipulations on this contract. So a put and a call then give the right to the buyer to do something. The right. So if you buy a call or you buy a put, you buy the right to do something. If you're selling a call or selling a put, you become obligated to perform that something that the buyer wants. Okay, so if you sell a call, the buyer has the right to call you on it and say, you sold me a call, you took my money, you better do this for me now. Same with the put. If you sell a put, the buyer of the put earned the right to do something and they can call you on it. That's called being exercised on. What it does doesn't matter. But when you're seller of options, you become obligated to do something. When the buyer of options, you buy the right to do something. You're not obligated. Now, you don't need to own shares to do anything in the options table. You don't need to own shares to buy a call. In fact, that's how you buy shares. You don't even need to own shares to buy a put. That's how you short stocks very responsibly. So we just threw a whole bunch of information at you. But the most important part is to come back to the delta. So there's a buyer and there's a seller of everything here. So let's take it at current price. If you bought shares of Apple right now, you have a 50% chance of winning. That's a statistical fact. The seller and the buyer, neither of them has an advantage. They may think they have an advantage because they did homework better than the other person, but that's a perceived advantage. Mathematically, it's up or down. You can be right, you can be wrong. So same with options. If you buy a call, this call option here, you can be right, you can be wrong. Your delta is 50.5-ish, right? 0.5, 50-50, right? So if you go up, your delta is dropping. Look, it's below 0.1. So let me rephrase it. So let's take this level, $210 Apple in 57 days. Let's go to the delta. Is this number big or small? That's a number that's very small, right? So what are the odds of Apple going to here? So the delta says there is very little, like under 2% chance that Apple will be $210 in 57 days. That's what the delta is saying. The delta is saying there's a 50-50 chance it will be at 170 in 57 days. Why? Because it's there right now. There's a 20% chance. There's a 15% chance. There's an 8% chance. There's almost a 100% chance. That's almost 100%, 0.9, that it will be at or above 135 in 57 days. Let's take the put side. There is very little chance. That's delta on the put side, 0.05. That's a small number. There's very little chance Apple will be at 135 in 57 days. So if you're the person buying this thing, hoping that price would fall to it so you can make money, you're buying a very low odds lottery ticket. If you're shorting Apple, but this is shorting Apple. If you're buying this thing, which costs 10 times more than this one, $6 versus 60 cents, you have a 50-50 shot of winning, because Apple can just drop like this tomorrow. We don't know. And it's here right now. So your odds are 50-50 to win this way. Your odds are under 10%. Your odds are, somewhere around 18%. Your odds are almost 100% that Apple is not going to be up here. So this is your odds maker. Delta is your odds maker. So if you ask me what's my favorite Greek, that's the only Greek I care about in order to trade successfully. And Evelyn, if Evelyn wants to learn how to trade stocks and not options, Evelyn should learn how to read this the way I just said it. Because if my brother, who does not trade options, he's a surgeon, and I saw him yesterday, first time in 3 years. If he says, "Hey, I'm looking to buy Apple. I think it's going to go to 190 by October," I'll say, "Let's check." You know what? The market makers tell you have about a 13-15% chance of that being correct. So I would change your expectations. Either say in 6 months rather than in October, because this is only giving it 57 days. Or I don't think it's going to hit 190. It's more like 180 max. And let me show you why I would say 6 months. How do you exit out of this? Okay. So if I extend it to December, 190, now the odds are 25%, just under 30. Why? Because I doubled the days. So, okay, Apple may not get to 190 by October, but if you give it another 3 months, maybe it will. And if you go out further in time, you can go out to 2023, April. You can go out to January 2024. And the odds are almost 50-50 that it's going to be up there, because we have 2 years. So time, theta, is important, but I don't need it to trade. If I want to be successful by managing my odds of winning and losing, The delta is the bare minimum I need.
Hey,
And if I
Nick,
ignore gamma and I ignore
re-
vega and all of those other ones, I'll survive. I
really
mean,
quick
those are
here.
other tools, but I don't need them. I need delta.
Folks, we the prior link that we had posted had like a typo, so it wasn't working apparently, but we just corrected the link. So a couple of you guys emailed me here about joining, so I went ahead, I updated the link. Make sure that you use the one that we just posted, the most recent one that we posted in the chat.
Wow, that I just saw the chat. It's pretty busy. Okay, so hopefully that answers your question. So if I had one to concentrate on, it's the delta. So that's an important metric because it tells me how to manage my success. So today somebody asked me about do I close my call or what? The first question is, other than why did you take and all of that, what is your delta? And then you can, I don't see it typing, they take 5 minutes to answer me. When you ask me about a call and you don't know the delta off the top of your head, that means you're not managing your risk properly. That number is in my head at all times on my trades. When I sell spreads, when I sell puts naked, when I'm long a put or long a call, I know at every moment what my delta is, where my risk lies. If somebody asks me, oh, how's your trade going on SoFi? What's your delta? Yeah, it's about 50%. So it's the same. It's about the same when I bought it. I had that conversation today. I bought SoFi, I want to say a month ago, 2 months ago, and I shared it and it rallied in our favor. It was a double or triple. I closed it and then SoFi fell. I said, okay, it came down to 7. Are you ready to reload? No, I wanted under 7 and it went under 7. I got in and I bought a call for, I believe, October in the money call. I paid $1.10, $1.05 maybe. And it went red a little bit. Yesterday was green a little bit. Today was about even. And they asked me, have you given up on it? I was like, I just entered it. The delta hasn't changed. So no, I have not given up on it.
Hey,
So
Nick, really quick here. Jessica has a good question. She apparently, so Jessica's saying that she trades iron condors. That's the only thing she does. So she's pretty much asking if it would be a good fit for the chat
well,
room if with that's her style.
Jessica. So let me describe. Yes, it would be a great fit. If I had one thing to do for the rest of my life, it'll be iron condors. So we do it daily on the SPX, for example. So today, the iron condor is where you sell the risk down here and you sell the risk up here. And you basically say the market maker is going to win. Price is going to stay between the highs and the lows, right? So this risk that you sold will die for maximum gains for you. This risk that you sold will die for maximum gains for you. And so you keep money from both ends. So you end up yielding like 25% and you literally need nothing to happen. That's how you win. When nothing happens, you win. So today, Jessica, the market opened. I said, it was the SPX. I said, here's the credit put spread for today. And then the market rallied a little bit. I said, here's the credit call spread for today. And then the market ran into the credit call spread and we took some heat. But I still said, I'm staying in mind. It's still early in the day. It was like 9 o'clock my time, which is Pacific time. And they said, have you moved it? Have you closed it? I was like, no, I have time to react to it. And then I said, in fact, I'm going to short it again because I see a technical setup. I sold an in the money call spread. Jessica will know what I'm talking about. Collected $3.30. So I only risked $1.70. And then the SPX took a nosedive. And I immediately scalped it and it went down to $1.50. I closed it for $2. So I made $110 per contract out of thin air in like literally 10 minutes. And the iron condor worked out. If you close the call spread for 5 cents, those who were greedy didn't want to spend 5 cents. They probably took some heat on this side of the call spread. But if you like iron condors, I think you're going to love the room. Yesterday, we did an iron butterfly that won. The day before yesterday, an iron butterfly that won. If you don't know what that is, it's an iron condor that are touching. So this is an iron condor by selling credit put spread and credit call spread. But if you sell them touching each other, like credit put spread and credit call spread at exactly the same place, that's an iron condor. So you're basically saying, I know where it's going to close. I'm going to take my risk here. And if it closes there, you win a whole bunch of money and you risk very little. It's a low odd. It's like a hole in one, not in golf, in mini golf, where it's, you could do it through the windmill, out the spout, down to the lower level, that kind of trade. So you could do it. It's a lot of fun. I don't do it every day, but on Mondays and Wednesdays, it's easier to do than any other day. An iron butterfly. That's what I said. An iron butterfly. A butterfly is something completely different. That's Chris. Chris Klein. I said I started with an iron condor to explain what an iron butterfly is. An iron butterfly is an iron condor that touches. So if you sell an iron condor, it's 2 boxes. If you move the boxes where they're touching, that's an iron butterfly. So you're basically an iron butterfly. So just so you know, market makers sell the straddle, right? So this is current price. They sell, you want to buy a put, they'll sell you a put. You want to buy a call, they'll sell you a call, right? They sold the straddle. An iron butterfly is basically that, except since we don't have unlimited deep pockets, we protect ourselves by buying a put and buying a call, which makes the iron butterfly. We're getting in the weeds here. It's a lot of fun. I'll explain it live. Don't worry about it.
Right. And Evelyn says, about to start the course. What would be the schedule, please? Thank you in advance.
Say that again. Schedule of what?
The schedule. So Evelyn is asking, she's saying that she's about to start the course. She's about to join here. What would the schedule be?
So the first thing I would do is jump into the chat room tomorrow morning. I have a section right here. This is Nick's important messages. Nobody else can post here, so they don't scroll off the screen. So you can see every day. Sometimes I share videos. Every day, Sunday charts. This are 3 videos, each, I don't know, 40 minutes long, maybe. Anyway, total is about a little over 2 hours. And they have this with them, which is my spreadsheet with clickable charts. 170 tickers on that particular Sunday. That's 2 Sundays ago. How long does it take you to type this up? I do it for you. So basically, you tell me your tickers, and I'll review all of them on Sunday with comments and videos. And I record it live. If you can't attend it, you can watch it in the recording later. So tomorrow, you come in here and you read my morning note. Why? Because in the morning note, you will get to the live session and you will get the comments and the levels of charts, like what's going on through the day, support and resistance in all the SPY, Qs, IWMs, futures contracts, whatever, and also earnings, like who's reporting earning for that particular week. So I try to do all the homework that you guys need so you don't have to do anything. So let's say you're a busy person and would like to invest and would like to trade, but you don't have time to do the homework. Just throw it in my lap. So far, I haven't said no to anybody. There's one guy that submitted 80 some tickers. Like what did you just dump your whole watch list in my lap? Luckily, there were a whole bunch of overlap. So, so there are people that consistently drop 20 tickers, which I think is too many. But right. I'm not going to say no.
We have a Jeremy, drunken in style, on Zoom. That's his name. Is this easy for someone to get into that has no experience in this field? This is all new to me.
Not if you're drunk. No, it's not easy. It is. Nothing is easy. I teach in as easy format as possible because I don't try to drown you with acronyms. I didn't come from Wall Street. I'm an engineer. I'm an electrical engineer who was into finance and then did my own thing and then stopped everything else to do this. So I didn't go through some Goldman Sachs school, nor do I know any actual Wall Street traders, except some of the people I met through Benzinga that are mentors on Benzinga. But this is as legit as a street guy who jumped into trading and is beating them at their own game. As far as the education piece, I think it comes across better because it is not jargon filled. So I can explain to you technicals on the chart from a Main Street perspective. Like, is this a head and shoulders? Are they? It looks like a short covering rally. Who gives a shit what it's called? Excuse me. Who gives a crap what it's called? Let's just trade what's going on. Is this a short covering rally? I don't know. Is it? How is that different than just a regular rally? Let's see. So we have tools to know what the algorithms are, luckily. So I can tell you where the dark pools are, for example, because I can get that information. But I don't need it to trade. It's just extra information to make our levels more bulletproof. So yes, I understand the jargon they speak, but I don't need to speak it. And I put it in words that you can use. For example, dark pool, right? Oh, there's the $400 million of dark pool at 412.15. What does that mean? It means that if the stock is falling into 412.15, it's going to find some support. So instead of telling you it's a dark pool level, I'll put a line and I'll say support. So it's that easy, as opposed to trying to drown you. And like on the 5-minute basis today, let me see, 1 minute basis. Okay, so this stent right here. So I tried to tell them, I was going to explain that this looks like some program machine going on, and I couldn't get it across. And I was like, this doesn't look like human. Look at it. It's almost identical. Humans don't do this. Humans do this stuff. So this is typically a machine, and it's programmed. Its algorithm flips into buy dip, buy dip, buy dip, buy dip, buy dip. And if you try to fight it, you're going to lose money. So don't try to fight it. Recognize it's there, and you can totally see it. So you don't touch it. When does it stop? So I went through 20 minutes of explaining when does it stop and how does it stop. I deleted those lines because I remembered them in my head. First, you hit a significant level that the machine says, wait, I know I have an algo to buy the dip, but now I have a significant level that was a major loss early today. I would like you to look left and look at the purple line I put hours before that. So let's go. Look left, and that's the purple line. So that was the line that made us that $3 short at 41.75 on the SPX. I said, if they lose this line, they're going to fall apart. And I had target 1. I called the top today. I said, this was target 1. They may bounce, and they're going to come down to target 2. And I mentioned it anyway. And then this was trigger to come down. And look how they stopped, like exactly at it, right? And then they found support. Look left. Look left. You can't make this stuff up. Look, I'm not going to put a line. I'm going to draw a line. So look at this one. This is exactly that, right? So let's see what happened later. Look at where they stopped. It's not rocket science. Look at where they stopped again. And again. And then look at where they broke out. Look at where they came back to say, yep, okay, that's footing, and let's go. So this is what happens all day, every day. I promise you, it's a lot of fun. You hear me say this every day. How long before you learn it? Right?
Right, Nick. I mean, even though you're doing live trading the whole day with them, we can't really not talk about the education.
This is live. I'm trading live. They're trading live. They're posting their entries. There are at least a dozen entries every day that are not from me. I just bought some puts.
So this is like it's like education with the current market, right? Education, trades, and the current market.
It's hard to describe. It's a fun environment where a whole bunch of traders are hanging out, and there isn't one jerk in there. There was one heckler, but I think we handled that, and I think he's in our chat room now, but our live room every day, and he's fine. He just had one bad day. It's hard to describe. The only thing I can tell you, if you're serious about improving your trading, I guarantee you have a chance of doing that with me. And if you think I didn't deliver, you have 30 days. I take advantage of the 30 days. Don't try it for 3 days and go, holy crap, I better cancel. You have 30 days. Use the 30 days and cancel on the 29th day. So I think if you're serious about trading, you're going to love it and you're going to stay forever.
Right.
What
I mean,
else?
I know that we do have people that join and they haven't even started trading. They just join for the education to learn.
Okay.
Right.
So Rajesh says, look left. There's no mystery. I'm just telling you to look left. So where was it? Was it SPY? Oh, I took away the lines. Yeah. So what I meant to say is, if this is coming here and I'm looking to go long a stock, I should look left to see what happened last time they were here. Last time they were here, they fell apart. So wherever I decide to go long, let's say I decided to go, I saw this, oh, I'm going to go long. Oh, damn it, I'm going to go long. Ah, I missed it. I'm going to go long. Look left. That's exactly where they fell apart earlier today. That's not a place you go long. And then they failed. They tried it again. They failed. They tried it again. They failed. They tried it again and they succeeded. And then they came back and tested it for footing. They stomped on the board. Okay, it's solid. We can go.
Right. And Tommy has a good question here. How does the 30-day money back guarantee work? So basically, if you're not happy for any reason, there's no restrictions on this. I know a lot of places say, yeah, it's a money back guarantee, but it needs to be raining when you ask for it, and you need to ask for it on a Tuesday. Some weird stuff, right? Always some random stuff in fine print. This is pretty straightforward. If you're not satisfied in 30 days, you get all your money back. That's simple. Basically, we just incur the processing fees for that, right? So, but that's the point, right? You know, these sometimes you find a mentor, an educator that really really gets to you, right? That really is able to explain things so that you understand and apply them.
Okay, so somebody today said, would you go along AMC? And remember, I mentioned that as a trade, yes, but not as an investment, because I just don't. This is AMC Entertainment. That's not AMC. Which one is the meme stock? This one.
Bed Bath. Oh yeah, that one.
Okay. So this the one that split with Ape? Yeah. What a mess. I don't know what the SEC is doing. What are you doing? So anyway, so here's a stock that fell apart and now 2 days is not making lower lows. That's reason enough for me to say, you know what? There's a thesis right there. In 2 days, it hasn't made a lower low. Maybe they're stopping the fall. They're stemming the fall. So the idea is to buy the dip into support. And if you say that's the reason I'm getting long, so if it goes below 9.2, you should be out because that reason is gone. Or you can wait for the breakout from this or from that. That's also a reason to chase to get you to 11 maybe. So if I get long here, I get out at 1050, 1070. And that's just proper trading versus BBBY. You know, I haven't looked at GME in a long time. BBBY was just a ridiculous scenario. The GME CEO was looking into buying the company or buying a whole bunch of shares. And then one day he says, I'm out of all the shares. Or
we have a couple questions here. John Claude, is it for the year? Yes, the 1782 is for the year. If you do want the lifetime, send me an email. Then Jonathan on the Zoom chat with a question here. I was checking out the chat from the dashboard today. It looks like you traded 3 butterflies. Do you trade a lot of butterflies or was today unique?
No, I don't know what posts on there. So the chat is not in there. The live room is nowhere near, nowhere on the Benzinga platform. The live room is, I host it. I used to use Jitsi. Now I'm using something else. It's not there. And the trades that are there in the live room are literally dozens every day. I personally like to sell spreads. So I end up selling iron condors for the day when I can. I offer 1 iron butterfly a day because they want it, not because I do one a day. I don't like to waste money. I offered a couple of regular butterflies, which are, okay, I think the market is going to move in the next 2 weeks, 3 weeks. I want to take a position that kind of doesn't need surgical precision. And that would be a wide butterfly, not a regular butterfly. So in other words, for example, I wanted to short the market when the market was rallying, right? When Apple went and made that high, I said, I'm shorting Apple, and I could do a debit put butterfly in say the SPX. And I use an example. I buy a 4,000 put. I sell two 40/50 puts, and I buy a 4,100 put. So I just need a drop. I don't need it to be surgical. If the SPX just drops, I think the cost was $3. I'm going from memory. Within a couple of days, it turned into $4.50 or $5. So you pay $3 and then you sell it for $4.50. So I did the same on a calls when I expected a rally bounce off of the June calamity. It was $2.35 and it more than doubled. So I closed it. Then we dipped a little bit. I said, you know what? I'm going to reopen it. And when I reopened it, it was more expensive because the VIX had spiked. So then the reopening was like 350 or 4, and that also made money. So I do butterflies, but very sporadically. I prefer selling iron condors. I prefer selling put spreads into dips. I prefer buying shares or buying calls into cheap stocks that fall into extreme levels that are misunderstood. Like, I'm confident people don't understand Palantir. I'm willing to risk it at $8. Similar scenario with Upstart.
Yeah, and Piyush here on the Zoom chat. Sorry, joined late. Not sure if this was answered before. How does this help? How does the chat room help a beginner like me who knows nothing about the stock market patterns or charting? So technical analysis, right?
What if you wanted you're interested in the stock, and if only you could just jump into a place and say, I think I like the stock, help me trade it. What would you do? And you will have me talking to you, telling you how I would trade it with you watching my screen. Would that help? How much is that worth to you?
Then we got Rajesh saying, my style is trade often, trade small, get out when you can, given this market. Sounds.
But it sounds like James. I have a guy in the room named James. He trades like 600 times a day. Not me, him. And he says, I can't stay in the trade more than a few minutes. Sounds like you. So you trade small, you trade often, and you get out. You need to be in the room. Will we see Nick trade live? You won't see my account, but you'll see when I tell you I just took this trade and here's what it looks like and here's why. I don't share my account with you, but I can't take every trade I recommend because I write for literally thousands of people. I would have a portfolio of hundreds of trades at the same time. There is a place where you can see them. So Rajesh, if you're in the live room and the trade has minutes to go, I'm not going to write it up and share it in the place where they cannot trade fast. So in the live room, you will see it. I'll tell you where it is. I'll put a box. I'll share. I'll show you an example. So at the close today, I said, I'm going to try my luck at shorting the open tomorrow. And I explained how I could do it gently without putting myself into danger. Where is it? Anyway, I shared a box. I don't see it. Anyway, let me see here. Nick W, Nick Show. Maybe it's here. Yes, leave. It's probably here. Yes. All right. So at the close, when we had that final spike, I said, here's how I'm trying to short tomorrow. I said credit call spread for somebody that can sell spreads. I believe, I forgot her name. Is it Jessica, Pamela, whatever? I can't remember which one it was. She likes to sell iron condors. This is the top end of an iron condor. And then I remembered that there are some people that don't have the permissions in their accounts to sell credit spreads. So I said, this would be a way to mimic a credit spread by doing a debit put spread versus a credit call spread. A debit put spread, they kind of have the same risk profile. They both need nothing to happen. What they need is the stocks, this, not to do that tomorrow. So if it does that and they stop here, they both win. How? It's about 75 cents. So if I do 10, it's $700. So I put the box and I said I just took it, and I said I paid $4.30, and by the time I posted it, it was $4.20, even cheaper. So somebody did this, they collected 75 cents. I paid $4.30, so I collected less than them basically. We both have the same risk, and we both have the same rewards, and we both have the same risk profile where all we need is this not to happen, and we have 8 hours to react to it.
Hey, Nick, really quick here. Have to give a big shout out here to the new family members. We have Jason. Welcome to the family. We've been emailing there for a bit, Jason. So welcome here. We have Mike Agoho, Annie G, CS4. Welcome to the family. Let's go.
Right on. So as far as how things play out during the day, so I said if we break 417 in the SPY, this is the SPX, I said this would be the upside target, right? And look at where they died on the first effort. And then when they dipped, I said if they dip, this will be the second path, and this will be the target. And they exceeded the target by a little bit, but that's because of the gap. I think there should be sellers hiding in this box. So tomorrow we should see sellers, but then we have artificial temporary disruption by Powell's gabbing, blah, 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 blah. So he's going to be flapping his lips. Earlier today, I said we sold a credit call spread in the money. That was it. And it paid us when this happened. I shorted the market here and this happened. And then it played out. I booked it. I left money on the table. I wasn't perfect closing it, but I definitely made money. And then when it rallied back, I had risk open here at 41.90. I said, it's 5 cents, close it. If they didn't close it, they lost money, but I'd be shocked if they didn't close it.
Hey, Nick, do you remember, I was there in the chat room that day for a little bit, I think. And there was this lady, and she just came in and she's like, hey, I just joined. I'm feeling like doing a risky trade. And you're like, hey, maybe just, buy puts on the SPX. And that was actually the top before we had this massive drop we've had these past couple of days.
I remember that. I'm trying to remember who it was. It's Aaron from Turkey. So it was Aaron C. Don't assume it's a lady. You don't know. So anyway, that day we had two people trading in Turkey at the same time that didn't know each other. And one was visiting Turkey. I think one lives in Turkey. And Aaron comes in and asks for high adrenaline trade is what they said. High adrenaline trade. I said, well, I would buy a put because this is what's going on. And then it played out perfectly. So these are my lines from before the day opened. These two purple lines are dark pool lines that they should say dark pool support. But I said before the market opened, I said, this is a weak spot. The market fell into it. I said, this is support. The market bounced off of it twice. This is resistance. They struggled with it. This is resistance ahead of the Monday gap. So they were ready. So these lines are available before the market opens. This is extremely strong support. That's the flash crash from Ukraine. It shouldn't be easy. This is also the area from early May, which was an extremely pivotal point. So it shouldn't be easy. Easy for what? Easy for the bears to cut through. It should be support on the way down. So Rodrigo, I'm running out of energy, friend.
All right. So what we can do, we've been here, folks, for about an hour, 30 minutes, an hour 40. Again, all this time is out of pocket. Like we started at 5 p.m. Nick was in the chat room all day, all day, Monday to Friday, at 5, straight coming out of that. He came here to the session. I've been working all day too. And then from there, I came straight here to hang out with Nick and with you guys, so this is fun. But if you think this is fun, check out the chat room. There's a 30-day money back guarantee. There's just no reason why you're not, on it. So Nick, any closing remarks on what the folks here, all the people that just joined, right? And what they should be expecting starting in the chat room this week, kind of how to, go through it.
Okay, somebody asked for Pinterest. That's what I think will happen. Good company, good P&L. I can be long. I don't chase. Pick your entry points, leave room to add later. Don't go all in because it has to work within the stock market. So the biggest thing right now, whatever your conviction is, you like that? You're welcome, Vikram. Whatever your conviction is in Pinterest, I think it's a good company. I think it has a good P&L. I think it has decent management. I think they don't make a lot of mistakes. But whatever your conviction in Pinterest is, this is a weekly chart, by the way. The level of conviction should be taken down on purpose because of this market maker thing. If the VIX is 22, that is mathematically telling you that the market makers who actually rigged the game, they're the casino. They know there's something shaking. That's why they're pricing everything high. Respect their fear, their concern. Put your seatbelt on. The easiest way is not to go all in. AM drop in the SPY. I'll trade it tomorrow. I'm not a good guesser that way. Statistically speaking, if for the last 20 years, Google it, I can't remember the exact number. There's somewhere around 20 and 23. Either in the last 23 years, you would have made 20% if you bought every close and sold every open. But then there are tools out there that tell you what the market should do at the open. And that tool said up tomorrow. I was like, that tool is a little wishy-washy because that tool tells you it's wrong 60-40. Like, that's about a coin flip. You can't make a living with that. Yeah, statistically over 20 years, that might be statistically correct, but you can't make a living because you can go a whole year being wrong and then 3 years being right. And you average over 20 years being right. You can't make a living by being wrong for a whole year. So anyway, be careful.
Right. Good stuff there. So Nick Chahine there, folks, lead trader at the Options Inner Circle Live Trading Room. Big shout out there. Proper send off here. Hold up. Let's go.
VIX answer. What, Rajesh? It's not a plain black and white answer. The answer is yes and no. I'm not going to answer yes so you don't go out there and start selling willy-nilly. We can debate it. I can offer you all the answer left to right about that, but it's not a one-sentence answer. I'm sorry.
Right. Okay. Well, let me go ahead and share the screen here, Nick. And thanks a lot, man, here for your time. I'm going to stick around here, just going to show the folks here some of the the chat room, right? How it works and all that stuff.
Great. I appreciate your help, Rod.
All right, man. No, sounds good. I'll see you in the chat room there.
Bye.
All right. So that was Nick Chahine. That's, this is the chat room. Let me show you this really quick. So you see there's two channels. There's one that's called Inner Circle Chat. That's where everybody's posting, including Nick. It's the whole community. And then you have Nick's important messages where only Nick is able to post, right? And in this post, you're going to find all the charts for the indexes, futures, and you will have, this is the live session, right? Right here, this link. This is the live session, Monday to Friday, 9 to 5. It's basically how you would, pretty much like join the meeting whenever it's there, right? So Safari, all that stuff. Obviously, he's not there right now. He just left. But this is basically right where you would do it, right? You install this thing and everything. So right there, you'll have the live session where you can pretty much interact with Nick, private message, all that stuff back and forth. Yes, Rajesh, we can talk after you join as well here. No worries, man. So yes, and a couple of things here. Some of you guys are asking about the laptop. We still have laptops. So as long as you join before midnight, because that's when it expires, you should be good to go. You'll have the 30-day money back guarantee, the laptop, and anybody that joins today from this session will get an extra 2 bonus items, okay, from me as a courtesy. These are going to be additional trade alerts. Okay, more trade alerts. If that's what you want, that's what you'll get. All right, you're gonna get trade alerts on top of the chat room stuff. This is a courtesy. This stuff is not free. It's basically, I just added it as a one-time exception for you folks if you do want to join today, right? So I think we covered most of the questions here. Thanks a lot, folks. I appreciate the time here with you guys and also for tuning in here for Nick. We're going to be in the chat room tomorrow about 8:30, 9 a.m. That's when we start our day. And just make sure you're ready, right? It's always a crazy day, but as a community and with Nick, it really becomes easier to navigate the markets. So reach out if you have any questions. Benzinga, yes. Alcop, not, no, it's not. But but send me an email. I'll hook you up, just you though. No, I'm just kidding. But send me an email so that we can discuss that. Okay. And big shout out to you guys. Have a great day. And we will see you guys in the chat room as well. Don't miss it out early in the morning. Have a great day, folks, and we'll see you there tomorrow.